Hey financial warriors, welcome to the show, and in this video I want to talk about Trump's proposed tax plan for the 2024 election. We'll have another video on Kamala's plan too, but this one is about Trump's. We're going to tell you exactly what taxes will be going down, which will be going up, and remember, this is just a plan. It will depend on whether he has Congress on his side to pass this. But here's what he wants to do. Alright, so first up, Trump wants to extend the personal provisions in the Tax Cuts and Jobs Act that would otherwise expire at the end of 2025. The corporate changes were permanent, but not the personal and small business ones. So basically, if that expired, your tax rates would go from this back to this. Those are the rates for both married filing jointly and single filers. You can see that every level of taxation was lowered after the Tax Cuts and Jobs Act, except for two, the 10% rate and the 35% rate. At 10%, you're hardly paying any tax anyway and often getting a lot of it back through various credits. And at 35%, don't forget that people paying the 35% rate are only paying that on income between $200,000 and $500,000 in the case of single filers. Married filing jointly is slightly different. So they benefit from all of the cuts on the brackets below $200,000 still, and the cut on the rate above, if they are lucky enough to earn that much, of course. And extending the Tax Cuts and Jobs Act would also include extending the increased standard deduction, extending the 20% pass-through deduction for small businesses, LLCs and S-Corps, which is huge, by the way, for people who have small businesses, extending the increased child tax credit of $2,000, and a few other things. But Trump has said this time he will not extend the $10,000 cap on the deduction for state and local taxes. This caused many middle-class and wealthy families who owned large properties, especially in blue states, to actually have higher taxes under the Trump tax plan the first time around. That is because they could not get a federal tax deduction for most of the money they were paying in state taxes and property taxes. All right, let's now move on to some other tax policies that Trump wants to implement if elected. First up, he wants to exempt certain types of income from taxes. So there would be no tax on tips.
When I get to office, we are going to not charge taxes on tips, people making tips.
No tax on overtime pay for those working over 40 hours a week.
We will end all taxes on overtime. You know what that means?
No tax on Social Security benefits.
We're going to have no tax on seniors' Social Security.
And no double taxation for Americans living abroad. And then just yesterday, it seems he hit us with another proposal, which is this.
We will make interest on car loans fully deductible.
So you wouldn't pay taxes on the amount of money you pay each month in car loan interest. I guess it is a way to encourage car ownership and stimulate the auto industry. It'll probably come with some condition like the car must be manufactured in the US. That sounds like a Trump thing to do. So that's a lot of little tax cuts in addition to extending the Tax Cuts and Jobs Act. But how is Trump going to pay for all of this? Well, first, lower taxes don't necessarily mean lower income for the government. Right now, we are still living under the Tax Cuts and Jobs Act, and Biden actually kept most of Trump's China tariffs and has even added more. And government tax receipts are the highest they have ever been. So just implementing a tax policy like the Tax Cuts and Jobs Act or extending it can lead to higher income for the government. But then Trump is also going to get rid of the renewable energy credits from the Inflation Reduction Act and use more tariffs. He proposes a 10% tariff on all imports and a 60% tariff on all Chinese goods, which could raise as much as $3 trillion over 10 years. However, it would make goods more expensive. Some estimates putting it at $1,700 more per household per year, with think tanks like the Institute of Taxation and Economic Policy saying that tariffs alone will cancel out any gains from lower taxes for all but the richest Americans. Now, I personally don't really agree with that, since one point of tariffs is to encourage domestic production and not buying things from China. If that really happens, then goods will be a little more expensive because American goods cost more than Chinese goods, but not 60% more. With increased economic activity, you will see a rise in real wages too. And those niche groups, like people who rely on tips or do a lot of overtime, etc., could really see their taxes come down by a huge amount. So Trump's tax plan, like the first time, could mean different things for different people, and also may take a few years to save some groups money. For example, if you rely on tips, you'll probably see lower taxes straight away. But middle income, regular W-2 workers who don't do much overtime may notice products are more expensive at the beginning with 60% tariffs on Chinese goods, but as domestic production increases, those prices would come down, and perhaps wages will increase too. Or at least that is how it's supposed to work. It is, after all, an ideologically driven tax plan. Trump wants to punish China and produce domestically. He also just wants to lower taxes, not keep taxes the same or increase them and then give people their own money back through tax credits, like you will see when we talk about Kamala's tax plan in the next video. These ideological things don't always work though, like what we saw with the SALT deduction cap the first time around. Trump capped it at $10,000, probably hoping that blue states would reduce their state and local taxes. Many red states don't even have income taxes, so it had way less effect in red states. But the blue states didn't really lower their taxes at all. So this time it looks like he's not renewing that cap so that everyone gets a tax cut. But this time it's really going to hang in the balance as to what effect the tariffs have as to whether people save money or not. I'm optimistic about it, but what do you think? I'd love to hear your comments. All opinions welcome. Let us know down below. Please subscribe to this channel if you're new, and we'll see you next time. Bye-bye.